Hi there. Welcome back to Micro Lecture. Gonna try to do a few lectures here from my home office. 12. All right. And just to talk to you for a little bit before we go to the board and look at the table. Um, Taxes well, first of all, they suck, right? Remember we talked about that because G ain't free, baby. So you've just got to keep in mind that there are a lot of different types of taxes, and different taxes mean different things to different governments. First of all, you have local governments, which include towns and counties, municipalities, school districts. A lot of people forget school districts. They're a local government. And then on a state level, and then you have a federal level of government. Now, starting at the federal level and the state level, the primary taxes for federal and state level governments are income taxes, with a few exceptions. Texas, Florida actually don't have state income taxes. State income taxes. The federal has income taxes everywhere, but the state doesn't always have. There's a few outliers that can get away with things like having a sales tax on a state level. Why do you think Texas and Florida can get away with that? Well, they pull in a lot of tourism dollars, especially Florida, so they can actually get away with not having taxes. And a little known fact about the state of Alaska, they have such benefits from their petroleum exporting, allowing public lands to drill for oil. The state tax actually pays them. So if you're a resident of Alaska, you actually get a check from the government, which is pretty interesting. But most everywhere else, including where we are in South Carolina, we pay state income taxes, and that's the primary tax for states and federal governments, by and large, especially federal government. Um, as you get down onto the local levels, you're moving into more sales taxes, especially in touristy areas, Myrtle Beach, Charleston, that type of thing. They'll have a pretty heavy sales tax on eating out or staying in a hotel, that type of thing. Um, but then the big one for local government is property taxes. So we have a lot of different taxes. This chapter has some great insight. It's not a very long chapter, too, so make sure you're reading it. Make sure you're reading it, doing the video with the PowerPoint, and using this as a supplement before you do the homework. So you get sales taxes, property taxes, personal income taxes. You have corporate income taxes where they tax businesses. Um, and you've got all the different levels of government. So just keep that in mind. I want you to make sure you read a lot about that in this particular chapter. Um, the thing that I wanted to spend the bulk of this particular video, I'm going to break this up into two videos so they're shorter, was the progressive income tax, which is a marginal tax in this country. So think federal income taxes. A progressive income tax means the tax progresses as you earn more income, i.e., the tax gets bigger. So if you make more money, you pay more. That speaks to something we're going to talk a little bit about in the next video when we're talking about ability to pay principle and benefits principle. But we'll go into that in more detail in the next video. The federal income tax rates that we're going to be using come from Table 2 in your textbook. And those are the income tax rates now from 2014. They just came out with a new edition of this textbook. In fact, I can't quite see it. That's it right over there. That's macro. The micro one's right behind it. And I'm pretty sure they'll have like 2018 numbers in there, but we're dealing with a 2016, 2017 textbook. So we're going to look at this at 2014 tax brackets. So just keep in mind those numbers have changed a little over time, some for the good, some for the bad, depending on what you make. But I wanted to go through those in this abbreviated lecture to give you a bit of insight into how the actual income tax works. So let me just peruse the textbook here and see if there's anything else I wanted to hit. Other types of taxes in that they're not actual taxes, like a sales tax, property tax, income tax. You need to know the difference between an average tax rate, a marginal tax rate, and a lump sum tax. Those are ideological different types of, like, different categories of taxes. They're not used in practice, but you do have an average tax rate that you can look at. Average tax rate is the total taxes divided by the total income. So as you might see, and again, back to table 2 here, if you earned $187,000 a year, yeah, number one, good job. That would put you in this particular tax bracket. You'll see here that there are 7 tax brackets. 1, 2, 3, 4, 5, 6, 7. That would put you number 5 is your top tax bracket. We're going to talk about that here in a second. You're actually in the other 4 tax brackets as well. That's the progressive part. 187 would fall right here, and your top tax rate would be 33%. Now, that doesn't mean that all of your pay is taxed at 33%. You're actually taxed at all of these, and we're going to work a problem here in a second to help you see that, which will help you with the homework. First of all, I'm going to say sorry if I'm not exactly my lecture voice. Literally everyone in my home is asleep right now. I'm doing this at night, so stick with me, okay? Miss you guys, by the way. This whole COVID-19 thing. We're recording this spring 2020. We got sent home middle of the semester. Didn't really plan on this, but hey, I'm going to try to lecture as best I can, okay? So you actually put commercial breaks in the middle of a recorded lecture. I'm here by myself. I can't help myself. See, I told you. You actually, part of your income comes through that entire progression of tax rates. We'll work on here in a second. So just make sure you understand the average tax rate is at the end of the day, what did you pay? What did you pay over what did you earn? And what is that a percent of your income? So again, the average tax rate, total taxes paid divided by total income. So if you earned $100,000 a year and you paid $15,000 in taxes, first of all, great job. Second of all, that would be 15% average tax rate, 15%. So you're like, wait a minute, $100,000, I would be in this third bracket, right in the middle. I should be paying around 28%. That's your effective tax rate, okay? That's the bracket you end up in. Your average tax rate is different. It's what you actually paid over what you actually earn. So I know you're probably a little confused till I get to the point, Kiesler, but give me a second. Give me a second. Marginal tax rate is the amount by which the tax increases from an additional dollar of income. So if you're in a progressive tax system, and let's say you were making $89,350, and you got a pay raise to $89,351, you would move over into this other tax bracket. Okay. And everybody's like, don't take that additional dollar. You'll be paying more in taxes. Only on that $1. So that marginal tax rate for that $1 goes up from 25 to 28%. We'll give the example, and I'll hammer it home here in a second. So that marginal tax rate is, hey, how much is my next dollar taxed at? All right. And then lump sum tax is the same amount for every person. You hear a lot of political ideas out there about lump sum taxes. And then the rest of the chapter I want to do in the next video. Let's get to this. Let's work an example. Okay. Like I'm gonna hear you answer. I'm sure some of you are nodding your head. I appreciate you. Okay. I'm gonna move my chair out of the way and try to stand. I'm gonna try to talk to you kind of half standing here. It's less than ideal. All right. So what you'll see here are 7 tax brackets. 1, 2, 3, 4, 5, 6, 7. And what I want to do is work 2 examples. I'm going to do example 1 where someone's earning 100K. All right. Yay. All right. And then I'm going to do example 2 where somebody's earning, let's say, 200K. Okay. Example 1, everybody's like, okay, 100K, let's come down. They must be in this tax bracket, right? They're in the 4th tax bracket, so they're going to be paying something over here. Well, that's true, but they're also going to be paying something here too. How a progressive marginal tax rate, when we're looking at income taxes work, it's not that you're in one bracket. Your first $9,000 $705 is taxed at 10%, whether you earn $10,000 a year or if you earn $10 million a year. You're in that tax bracket. Okay? So this would be 10% of 9,075. So your first 9,075, okay, excuse me, is taxed. I was writing the whole 9,000. My bad. It's just 10% of the 9,075. 907.50. Okay, that's your first part of your tax bill. All right, that's the first part of your tax bill. Now, you are earning 100K, so that lands you squarely in the middle of this tax bracket somewhere. Okay, now, pardon me, I gotta wake up my other computer so I can get a calculator out. This is why you have to hire an accountant. You don't really hire the accountant to do this calculation. After this lecture, you can do that. You hire the accountant to find a way to make your tax bracket smaller. Okay, they find you some what's called deductions. So one time for my computer to run slow, right? All right, so you're down here in this tax bracket, right in the middle of it, you know, this side of it, because of 89,000, you're 11,000 into this tax bracket. You're next up to 36,900, from 9,076 to 36,900 is taxed at 15%. So what I'm going to do is I'm going to take 36,900, all right, and I'm going to subtract 9,076, and that difference, okay, that difference, this width right here, is 824. That's the width from 9,076 to 36,900. 27,824, and that is the number that is taxed at 15%. So the difference between the starting point and this ending point is 27,824, and we're going to multiply that by 0.15, which is 15%, and we're going to get it. That portion of our tax bill is $4,173.60. Okay, now we're going to keep adding. All right. Well, we're all the way through the third bracket as well, because 100,000 is greater than 89.50. So what we do now, if you pick up on the pattern here, we subtract 89,350. Okay, we take 89,350 minus 36,901. And I just typed it wrong. 89,350 minus 36,901 is 52,449. 52. So from here to here, it's 52,449. Okay, and we take 25% of that. So 52,449 times 0.25 is 13,112. So 13,112.25. Okay, starting to see how this works. Now, here's the tax bracket where you are. Okay, we don't take the width of the whole thing now. We only take the width of your 100,000 you earn a year. Okay, and we subtract $89,351 because that's the width that you're into that bracket. So let's take 100,000, which is your earnings, and subtract out 89,351, and you get 10,649. That's the width there, 10,649, and you're going to multiply it by 0.28 times 0.28, and you're going to get 2,081.72. 2,081.72. Then we're going to add all those up, and that's what you're paying in taxes before deductions. All right, you need to give to charity, you need to invest in, actually you invest in your 401k, you can deduct that. Okay, it lowers your taxable income. Saving does matter, saving incentives. Okay, so let's add all these jokers up. All right. Oh, I'm sorry, I forgot the 9 here. 2,981.72 is 28% of the difference between 100,000 and 89,351. Okay. So let's add all those up. Bear with me while I do the math. Plus, follow along at home if you want to. In fact, you should do this because you're going to have to do it on the homework and on the test. Hint, hint. 4173.60 plus 907.50. And I get a total tax bill of $21,175. Okay, it's separate from that tax bracket. Okay, it's just where I'm totaling it. $21,175.07. Now, divide that. Actually, I don't have to divide it by 100,000. I can do that in my head. And my average tax rate is this number divided by what I earned, which is $100,000. And my average tax rate then is 21.175%. 21, let's call it 21.2%. 21.2%. That is how your income progresses through a progressive marginal income tax rate. Okay? Tax system. So this all goes back to the first principle you learned in macroeconomics. Principle number 1, people face trade-offs, and they face them between efficiency and equality. Now remember, the most efficient thing is just free market graph before we put in a tax wedge. All right, you put in a tax wedge, all of a sudden now we have administrative costs to oversee the IRS, that type of thing. You have less money in your wallet. If you have $5 and you go into Walmart and you want to buy something that costs $5, you don't have enough money because it's $5 plus tax. So taxes, there's a loss of efficiency, but when you're designing a tax system, you're talking about equality. Remember, that was the trade-off. So if you choose equality, trying to level the playing field and make sure that there are systems available for everyone, you need taxes for that, because when you call 911, you want somebody to show up. That's paid for with taxes, usually at a local level. So we're talking property taxes. You see how this chapter matters? It matters. All right, so let's work one more problem. Okay. I think you guys can see all right. It's this problem. I'm right-handed, so I'm going to block a lot of this. I'm just going to try to work it straight down. All right. Beautiful thing is we can use these same numbers, all right, through here, because here's the tax bracket that we fell. Then we'll have to do 2 more calculations, okay? So in this first tax bracket, you're still paying $907.50 for your first 0 to 9,075. Your next 27,824, which is the difference between 36,900 and 9,076, you're still paying that same 41,73.60. Okay, And then for that whole other bracket, 89,350 to 36,901, that's a difference of 52,449. 25% of that is 13,11225. Okay, but now if you're earning $200,000, you're in this bracket. Okay, down here. All right, but you're going to eat up this whole bracket because you earn more than 186. So now we need to know the difference between 186,350 and 89,351. Okay, bear with me. I'll do the math again. 186, which is the upper limit of this tax bracket, 350 minus 89,351 equals $96,999. That's a wide tax bracket. We'll talk about that here in a second. 96,999. That's the width from 89,351 to 186,350. Okay, and that's taxed at 28%. So let's take 28% of 96,999 times 0.28. And you get 27,159.72. 27,159.72. All right. Now let's move on down to tax bracket 5 because that's where you fall. Okay, at $200,000 a year in this example, you fall right in the middle of this tax bracket. All right. 186,351, you're on this side of it, but what is the distance between 200,000 and 186,351? That's what we need to figure out, folks. 200,000 minus 186,351 equals 13,649. So you're only 13,649 into this bracket. Okay, so that's the width between 186 and 200. Okay, and that's going to be taxed at 33%. See how the percentages get higher as you earn more? That's the progressive part. So let's take 13,649 and multiply it by 0.33, which is 33%, and your tax bill in that bracket is $4,504.17. Now, let's add all those up. I'll do it backwards here. 4,000, make sure you can see all that over there. Yeah. 4,417 plus 27,159.72 plus 13,112.25, math, right? 4,173.60 plus 907.50 equals your total tax bill here, $49,857.24. All right. Let's figure out what the average tax rate is there then. All right. 49,857.24 divided by 200,000. 24.9%. You earn more, you pay more. Average tax rate in a progressive tax system. So it's progressive. It goes up as you earn more. That's the whole point of this thing down at the bottom. It says progressive. All right. Marginal tax rate, in that your next dollar may be taxed at a higher thing. So remember, marginal and economics. Economics is like a second language. Marginal just means next. So your marginal dollar is your next dollar. How is it taxed? So in a progressive tax system, your marginal tax rate matters with your income tax. Now, when people earn more and they pay more, that's called a benefits principle. It's also called the ability to pay. If you have the ability to pay a tax, there are certain bureaucrats that think you should Well, pay your tax. You have the ability. Society has benefited you. So you think about the benefits principle as well. I need you to read about that. So hopefully this example has been useful for you. Hopefully I've made sense. Feel free to watch it again if you need to, or send a message or anything. Hope you're doing well out there. Take care, and I'll see you in the next video for chapter 12, the design of a tax system. Thanks.